You see it at the pump, you see it at the food cost, and the second time is the roll-off. The roll-off is $47.5 trillion out of the $9 trillion.
Good morning, everyone. We're about to start our presentation of Teton One Earth. I'm Stephen Bonded, Chief Executive Officer of Teton. Importantly, just note the disclaimer on the second page, but this presentation is not for solicitation or sale of investment products. On this next page, we have standard forward-looking statements disclaimer. Just bring that to your attention. Please read it. This information is as of the dates indicated in the presentation. These statements may be considered forward-looking statements, and we again point you to this forward-looking statement disclaimer. From this, we'll move on to the next page of the slide presentation of Teton One Earth. And I will introduce the panelists. We can go on to the next page. This is Teton Advisors, is a company that's focused on smaller company value investing. We continue the legacy of the founders of the combined firm, John Keeley and Marc Gabelli, Keeley Investment Management, and joined Teton in 2017 to create a dedicated boutique focused on inefficient market segments. We're here to exploit structural inefficiencies in small capitalization stocks and to focus on underfollowed and misunderstood companies. We have a bottom-up, fundamental, research-driven approach as value investors. We're active managers identifying mispriced companies with potential for outperformance. We have commitment to discovering value in overlooked companies and overlooked by many investors. We have a well-defined and time-tested investment approach. Importantly, the team across Teton and across the Gabelli Group is well experienced at delivering alpha to the underlying clients and investors. We have proven portfolio managers who have weathered both up and down market cycles and quite experienced in what they've been doing in the value investing area. Overall, we manage about $1.5 billion of assets as of the end of the first quarter. A significant portion of that is focused on micro cap, small cap, and mid cap stocks, and also small mid cap stocks, with less than 25% focused on other market capitalizations. We are team that is presenting today is Tiffany. May please roll to the next page. Is of course myself, as I mentioned, Marc Gabelli, Chairman of Teton Advisors, Anand Rawani, who's the Director of Sustainability. He has a certification from CFA Institute in ESG, and Tiffany Hayden, our Chief Compliance Officer. I will now hand it over to our Chairman, Marc Gabelli.
Yeah, thanks, Stephen. Let's let everyone introduce themselves. Steve, why don't you give us an introduction?
Sure. As I mentioned earlier, I'm the Chief Executive of Teton, having joined in late April of this year, having spent 23 years in the investment management business since I left Gabelli, the Gabelli organization in 2000, where I was here for about 18 years. So well experienced in investment management from both my years at the Gabelli organization, as well as the investment management business, mutual fund business, managed accounts, and the private investment partnership area as well.
Thank you, Stephen. Myself, I'm Chairman of Teton, a role I've taken on about 3-4 years ago. And Steve has been a longtime board member of Teton, and we welcome him into the role. Teton, as we've outlined, is a listed publicly traded asset manager with really some terrific attributes in the small cap area. And I'm pleased to be here with my partners, Anand and Tiffany, who will introduce themselves.
Hello, I'm Tiffany Hayden. I'm the Chief Compliance Officer here at Teton. I joined Teton in 2008 and I've been with the firm about 15 years, and I oversee compliance for the two investment advisors. I will now turn over to Anand.
Thank you, Tiffany. I am Anand Rawani. I am Director of Sustainability at Teton Advisors. I have been associated with the Gabelli Group for over a decade. I am a CFA charter holder and have passed certification exam on ESG investing conducted by CFA Institute. And I thank you all for taking our time and joining the webinar so early in the morning. Thank you.
Thank you, Anand. That's terrific. Before we move on to the next slides, we'll just give a brief introduction about today's discussion in One Earth, and then I'll ask Steve to just profile Teton Advisors, the asset manager, in context as it is a listed vehicle. I highlight Steve's forward-looking statements in that this is not a presentation to solicit. It is not a presentation to solicit investment products. This is an introduction to what we think is a very exciting area in how an asset manager follows an integration strategy in bringing ESG awareness into its portfolios. As you see in the slide, our approach is integrated, and it's an orientation towards smart companies engaged in smart economic growth with respect to the planet. About a year or so ago, Teton established its One Earth policy, and its One Earth policy takes into account a whole series of elements that ultimately drives ESG and ESG thinking into its risk management, portfolio communications, and in overall investment processes. Steve, why don't you give a brief introduction to Teton itself, if you can?
Sure. As Mark mentioned, Teton is publicly traded, trades on the OTCQX under the symbol TETAA. We have about 1.6 million shares outstanding overall. Stock closed yesterday at $19 a share. That's a $31 million market cap. Importantly, of that $31 million, approximately $22 million is in cash and investments. So we're very liquid. We've got strong earnings. Our EBITDA last year was approximately $2.9 million, and we feel there's plenty of opportunity for companies such as ourselves with a strong balance sheet and a history of value investing, make an impact in this area and continue to grow.
And thank you, Steve. And I saw Tiffany. Why don't we move to some of the following slides, and I'll just quickly introduce some of the other colleagues. As Steve outlined, Teton Advisors comes to the market with a long history from its founders, Mario Gabelli and John Keeley. Mario started Teton Advisors as part of GAMCO Investors in the 1990s, and ultimately it led to an IPO and public offering where Nicholas Galuccio, who you can see in the slide, was the longtime CEO and led really a period of significant compounded growth for shareholders well in the mid-teens. Yeah, I encourage investors to look at the Teton website, and you can find further data about the company. Next slide, please. Here's further names of individuals that are integral to our portfolio management process. And then you'll see on the top left, for example, Adrian Hilford. Adrian Hilford is actually with Westwood, and those that are shareholders of Teton know that we have the Teton Westwood funds, and Adrian is one of the portfolio managers of those portfolios. Adrian also is with Westwood Advisors in Texas, and we have a long-term relationship and partnership with Westwood, as we do with the Gabelli organization. Next slide, please. Very quickly, where does Teton fit within the Gabelli Group? Organizationally, Teton Advisors and Keeley Teton Advisors are two investment advisors amongst 5 in total that are controlled by the Gabelli Group. In the context of kind of offerings, Teton and Keeley both have mutual funds. They also have institutional wealth management, and there's a growing opportunity for Teton Advisors itself in the transparent ETF space. We'll talk about one of the new exciting initiatives in that area later in this presentation. To date, we have now ETF launched at Teton Advisors, although we expect that to happen this calendar year. Next slide, please. Again, this is a presentation not for the solicitation or sale of investment products. We'd like to introduce Teton One Earth. It's an investment policy taking into account economic growth in the context of impacts on the planet. Let's turn to the next slide. In 2022, Teton's One Earth was developed. It's a policy initiative within the organization that focuses on integrating ESG initiatives into its investment processes and overall recognition towards stewardship. In February of 16, 2022, importantly, Teton signed and became a member of the United Nations sponsored Principles for Responsible Investment. We take that seriously, and we continue to develop and adjust dynamically our investment management processes in the context of those principles. The Teton One Earth framework, as a function of our respect for the PRI and overall ESG integration, are based on 4 key pillars. First is an integrated research and communication process, and that's led by Anand, who's on the line. Active proxy. Teton votes as an active manager, as Steve outlined, with predominantly a concentration in small and mid-cap, micro-cap names, US equities, and active proxy is an important dynamic. There's an active risk management process and monitoring, and sustainability factors are included for consideration within that envelope. So it's a framework based on these 4 pillars: sustainability, risk management, active processes, and communication and research integrated into the investment management psychology and thinking. It's implemented using this foundation and research as its foundation. It's bottom up. Each individual portfolio and portfolio manager has tailored reports that are oriented towards their specific objectives and their portfolios. And we have an adherence towards the policies outlined by the CFA Institute in its 2021 publication, Global ESG Disclosure Standards for Investment Products. We also apply that, looking at how the European Union and Japanese reporting standards are applied to public companies, and we take that into account as we think through active proxy. Ultimately, our preference is a policy towards transparency and shareholder rights. This is, again, an integrated policy and not a policy of investment inclusions. Next slide. This graphic outlines this iterative process of portfolio monitoring, risk management, internal communication, proxy, with an overlay of sustainability. Again, as active managers, it's very important that the wheel spins and that the individual component parts work with one another on a regular basis as our teams evaluate their investments based on their objectives. Next slide, please. Anand, what I'd like you to do now is outline One Earth in really a practical setting. I'll introduce this slide here, and as Anand approached ESG, he looked at, what are the service providers in the offering in the landscape of ESG research. Of course, we have our own internal approaches, but there's also several external providers of which we make use of. MSCI is one of them, which helps categorize very well some of the ESG elements. And the columns you see here are really coming from the MSCI categorization. And we use this really as an organizational device as opposed to applying full credibility to how MSCI develops their ratings. And those pillars, as you can see, is there's some core pillars on ESG, and then you have themes within those pillars, and then issues. And Anand has outlined here some of those, and he has various color codes, and he'll talk a bit about that. We also, as an organization, use, for example, Refinitiv and Refinitiv data, and several of the other services. So Anand, let me allow you to just talk through some of the color coding here, and what is that indicating?
Yeah, so broadly put, there are a number of factors that determine an ESG rating. For instance, the MSCI ESG key issues hierarchy, which is depicted in this slide, includes analysis of 3 pillars: environment, social, and governance, using 10 themes, which are in turn analyzed and rated using 35 key issues. The themes and the key issues, which are in green, are the key issues under Teton One Earth, and which we will be discussing over the next slide. It's there.
Return the slide, please.
Yes, on oversight, we aim to be A and above, and we have determined that 4 themes: climate change, human capital, corporate governance, and corporate behavior will be our primary weighting themes. These have been developed using the MSCI landscape. However, as Marc said, we use services of other rating providers, such as Refinitiv, Sustainalytics. Marc, would you like to explain the table below that? You are mute.
Sorry, thank you. What Anand has illustrated here, and again, this is just a sample for discussion, is he analyzed firm-wide across Teton and its advisors over 700 holdings across its portfolios, representing roughly $1.5 billion of AUM. And in that, he analyzed, based on those holdings, what are actually the scores and what actually is rated by these external services. So in this case, it's MSCI, and you'll see that there's a column under each of the ESG categories: environment, social, governance, with the subcategories, for example, climate change. And if we just stay on that column, because it's applicable to all, there's a score and there's a weighting. And of the climate change, 500 of the holdings out of the 1,500 actually have third-party ratings. That's a 70% hit factor. It represents about $1 billion of AUM. We found that to be relevant. Those were then ranked across all of the columns, and those columns being climate change, natural capital, pollution, and as for a factor weighting, and therefore climate change has a number 4 in the factor. It's the smallest based on the hit rating, but it's also highly relevant. If you go across and just look at the yellow circles, you can see the first is corporate governance, which has over $1 billion of capital, 510 components that are rated. And number 2 and number 3 are also quite similar, over 500 holdings, about $1 billion in capital. So 1, 2, 3, and 4, also, those are ultimately the elements and the areas where we focus and where One Earth finds its greatest propensity towards the internal research and awareness. So it's really these areas, as Anand outlined: climate change, human capital, corporate governance, and corporate behavior. And it's meaningful to our overall portfolios and our overall advisors. Roughly $1 billion of the $1.5 billion have these external ratings. So therefore, we can rely to a large extent on our research coming from third parties, as well as our internal factors. Next slide, please. Anand, why don't you talk a bit about One Earth and its risk management dynamics?
Yes. We devise on an ongoing basis, using our proprietary risk template, inputs and dialogues with our portfolio managers, with their holdings in their sector in the context of ESG and other risk guidelines. Broadly speaking, our risk templates serve as a tool to monitor each portfolio according to a set of risk guidelines that are consistent with risk-reward objectives for the portfolio. When the established guidelines are breached, the risk management control process does not automatically trigger corrective action for the portfolio. Instead, these are red flagged and shared with PMs, the portfolio managers. We circulate risk management reports to the portfolio managers. Risk reports have two broad sections, portfolio report and ESG. Portfolio section lists elementary details such as weighted average market capitalization, dividend yield, volatility, several multiples, the PE ratio, EV/EBITDA, debt to EBITDA of the portfolio vis-a-vis of the benchmark, including the outliers such as top 10 positions, top 5, bottom 5 contributors, and detractors. On the right-hand side, in the ESG section has MSCI ESG ratings and ESG risk report on the portfolio, generally generated using Sustainalytics. On the right-hand side of the slide, we have shown sample risk report. This is for the small cap dividend value fund. And you can see certain red flags. If you see under the sector weight, you can see that Hilly's small cap dividend value fund has 19% exposure to industrials. In comparison, industrial has only 14% weightage in Russell 2000 value index, which is the benchmark for Hilly's small cap dividend value fund. The difference is 5 percentage point, which has been highlighted or red flag. Generally, any difference above 2 percentage point is highlighted. You can also observe red flags in the ESG rating section right at the bottom. We aim to be A and better, and hence companies in the portfolio having ESG ratings below A have been red flagged. Thank you. Over to you, Mark.
Yeah, and before we move on, keep in mind, please go back to that slide. As we, red flags are not hard actions for discipline. It's just an awareness. In fact, as active managers, we encourage all of our portfolio managers, as it relates, for example, to having different weightings relative to an index. We encourage our portfolio managers to continue to have various weightings and find certainly opportunities for their clients beyond that which is represented in the index. So red flags are not necessarily bad. They're points for discussion, and red flags are certainly areas where in the context of discussions, new ideas sometimes are also surfaced for other portfolios. So having an overweighting in Anand's example of industrials is something we actually, in fact, encourage to the extent that it's towards the efforts of seeking alpha outside of what is otherwise represented in a mindless index. Now let's move to the next slide. The next slide is about active proxy, and we'll ask Tiffany to outline a bit how proxy is implemented and some of the proxy dynamics in action.
Thank you. As part of our Teton One Earth policy, we have implemented an active proxy process, taking a more active role in proxy voting over the securities held in our clients' accounts. And I just wanted to highlight a few key points today. We have a proxy voting committee that has the responsibility to oversee the proxy guidelines and reviews votes to make sure they adhere to our guidelines and help reach a final decision on some proxy votes. In general, the director of proxy voting services will determine how to vote on each issue using 3 factors: the proxy guidelines, the recommendation of ISS, a third-party proxy voting service, as well as input from the portfolio managers and research analysts who will make the final decision on votes. The advisor will generally vote against the nominees standing for election if at least one of the 3 standards are not met. We want to see a different person occupying the CEO and chairman of the board roles. We want to see 70% or more of the board members are independent, and we want to see 25% or more of the board members are female. To give you an example, for proxy season this year, we've voted against management about half the time on all proxies voted. I will now turn it over to Mark.
Thank you, Tiffany. Yeah, so this is just a glimpse of active proxy in the context of this integrative approach. Let's move to the next slide if we can. This is One Earth in action. What are the actual results? As we said, we signed the PRI in February of 22. So we took a glimpse quarter to quarter, year March 31st, March 31st. Some of this information is available if one looks to our websites. But you can see an increase in actual percentages of A and above, as Anand stated. His objectives are to see that through research and through awareness of that research at the portfolio level, consistent with objectives uniquely assigned to each client, that there is also an effort towards increasing the overall weightings, and the weighted average of those weightings has increased. And if we just here have a glimpse of some of the funds, 25% of A and above in 22 to now 40%, with an increase of 15%, an increase of 23% for the small mid value fund, an increase of 22% for the small cap equity fund, an increase of 20% for the mid cap dividend fund. I don't know, Anand, if you'd like to add anything here.
No, I think it's well summarized. Thank you.
Thank you. Next slide, please. So now what I'd like to do, if I may, Anand, is enter into an area which is quite exciting for professionals like Anand and Steve and Tiffany, and it's the area of taking what is ultimately a policy initiative in a real growing and exciting area in the asset management initiative. How does one allocate capital efficiently as fiduciaries with respect for the planet, while also maintaining client objectives, and do that in a way that is that's integrated? So what we'd like to talk about today is how we're taking One Earth and ultimately moving into the realm of new product initiatives, specializing in the inefficient markets. Again, this is not a presentation for the solicitation or sale of investment products. It's illustrative, and it is one to set a guideline and a guidepost for both our shareholders, but also to encourage a discussion for the professionals that are involved in ESG with our professionals here at Teton. This is a process that's going to continue over the decades to come as we continue to move forward as asset managers allocating capital. Let's move to the next slide. So Tetonics and One Earth. Tetonics is a new product initiative. It's a new business line within Teton, which is ultimately a partnership majority owned by Teton with some outside partners. It consists of really three broad components: Onyx benchmarks, Tetonics funds, and the Tetonics digital distribution business. All of these are in development. It's development stage business today. The Onyx benchmarks will be our first business line to be introduced, along with our digital distribution business. The Onyx benchmarks are proprietary products and indices. They're developed for raising awareness around our capabilities, and of course, they can be used for tracking. We encourage, again, those that are involved in this subsegment of the asset management business to please contact us. We'd love to hear from you about further thoughts. It is a crowded field. We believe that our proprietary approach, bottom-up approach with a recognition of smaller companies in portfolios will actually be quite differentiated as it relates to ultimately looking at certain segments of the market as defined by our benchmarks. If we can now move to the next slide. Anand, maybe what you can do is outline a bit about what is this exciting application of the One Earth policy towards the development of an Onyx index.
Yeah, as Mark said, we are still working on it, but this is One Earth ESG index. It's going to be a passive factor-based global public equities index with focus on smaller companies. with companies having sufficient liquidity, which we would be measuring in terms of float to their trading value. The index construction would be a 4-stage process. First is universe selection. So from a global public equity as the whole universe of more than 50,000 stocks to a set of companies qualifying for size and liquidity criteria. Then to move on to constituent selection. This would be a non-exclusionary score-based selection criteria under 4 buckets. Those would be value, those would be value, momentum, quality, and volatility, with each bucket having equal weighting. The best that on the ESG criteria will be applied on this, which is the 3rd stage, and that is the best-in-class approach. We would be using the third-party ESG rating providers, and a portfolio of companies with high ESG scores would be filtered out based on the cumulative scores from the funnel constituent selection. And the final is the country and individual stock weights. This is basically our prudent risk management, which will be applied by restricting maximum weights to any individual stock in any individual emerging market and emerging market as a whole. Over to you, Mark.
Thank you. Yeah, and in this context, so this is a fairly traditional approach to constructing an index. There's a lot of latitude in that. In this case, what we do is take into account, and we're quite cognizant about the practicalities of this index. Again, but we all know that in the history of the development of benchmarks, ever since the American Stock Exchange started to develop, really, which was the beginnings of the ETF business, benchmarks ultimately can and do develop into investment products. So we're cognizant of the fact that there's some practical criteria such as volatility and volume that matter, so that in fact investors can invest and access what would be the portfolio of these represented in these holdings. What Anand mentioned, but I want to underscore as well, is that everything we do in this context is global. When we think of the themes around One Earth, these are global. They're important for our planet. And we take that, in fact, very seriously as we develop the Onyx indices. Next slide. This is a sample, again, for illustration only. It is not an investment product for sale, but you can look to the right and you can see the different weightings by country. And you see here that China, in fact, is a significant, in terms of the universe, a significant weighting. And then you look to the actual application in the index, and you can see the re-weighting that has occurred with the United States. And again, this is being cognizant of the One Earth policy, where underscoring transparency, following some of the CFA Institute guidelines, reporting transparencies, it matters. Myself as a portfolio manager, I'd like to see a lot more Japanese holdings in this index. And hence, there are some practical applications to why what we have here is still in beta test, because we do believe that some of the companies in Japan have the best reporting standards as it relates to sustainability and ESG in the world, with Europe very close behind that. So it's important for us that these indices, as they're developed and rolled out for more broader audiences, actually take into account also some of our knowledge on the ground as hands-on portfolio managers. Also, interestingly enough, is the market cap weighting. And as you heard from Anand, there's a propensity towards smaller companies, with really the bulk of the index, as you can see, kind of with the $3.5 billion range and below, really weighted in that category. Do you want to outline anything else here, Anand, please?
No, I mean, well explained. Thank you. Yeah.
Thank you much. Let's turn to the next slide. We now want to open it up for questions. In conclusion, One Earth is an important new element within Teton Advisors. It's been in development for the last year. We're very proud and pleased to have Anand, who is leading our development in research and development in products as it relates to One Earth. He is accredited, he's not only a CFA, but he's also accredited by the CFA Institute as an expert in ESG. He had just gone through recently their program, which was newly instituted program at the CFA Institute to really underscore this. So we, as a small organization, a boutique asset manager focused on small companies, will now start to develop much more around this theme of One Earth, and importantly integrate some of this awareness into the existing portfolios. So I'd like to open it up to some questions if we can. I can see here that from the field, we have a question coming in. Can you talk about your Onyx indices and what some of your plans are for that? And what is actually this Tetonics? And I guess that's from a Teton shareholder. Tiffany, maybe you can go to the slide that outlines Tetonics, please. So again, as we mentioned, you go to that, yeah. As we mentioned, Tetonics is a newly formed partnership within Teton, really concentrating on the development of Onyx benchmarks, exchange-traded advisory products and services, and digital distribution. There's a growing development in the asset management industry, of course, towards different packages that represent judgment. There's also packages that represent passive investing, and we understand that the ETF business broadly as a package has grown. Active management, of course, through traditional vehicles such as open-ended funds is still, of course, the predominant factor, but the growth has been in some of these exchange-traded funds, primarily because of ease of use. And in the context of that ease of use, there's volume and liquidity, which has been applied to tax advantages on the ETF product. At the Gabelli organization, several ETFs have been rolled out. We encourage all those on this call to please look at Gabelli.com and the ETFs that are non-transparent active ETFs, following really a very attractive model for the shareholder, and some very, very attractive themes around subsegments of the market, aerospace and defense and financial services, and also some others. So I encourage you to look at Gabelli.com for the passive the active non-transparent ETFs. In terms of passive ETFs, we're not a fan of Teton, but we are, as Teton advisors, independent from the Gabelli organization in the context that we can introduce different products and services through the realm of further experimentation. And we are introducing Tetonics transparent active ETFs in the near future. Those ETFs will be extensions of what is found on the Onyx benchmarks. The Onyx benchmarks themselves are expected to be rolled out and introduced for publication in the coming quarters. And again, one of those benchmarks is One Earth. It's an important initiative. There are several others, and they'll come out in due course. The plan is on Onyx benchmarks to be introducing 3 initially, and on the Tetonics funds, the product development and the introduction of those are very much dependent on some of the market demand. But ETFs with 7 trillion under management relative to a much larger sector in active open ends, about 1 trillion of that are active ETFs, and we'd fall within that active transparent component. The Presidian model, which is a non-transparent active ETF model that's followed at Gabelli, is a significantly smaller component of that $1 trillion. And it's been adopted by a few fund groups, but we encourage all to look at the various investment products throughout the Gabelli organization and ultimately understand what's driving some of these products. So as the businesses unfold, we will keep our investors informed, but it's an exciting time. And then lastly, digital distribution and the use of digital in the context of informing investors and having a broader dialogue. Certainly what's happened on the back of COVID has changed the way we all interact and meet, and ultimately it's happening digitally. And we at Teton continue to strive to inform our investors and meet new investors via digital, which is going to develop, of course, alongside of the Teton products and funds. And we believe there's significant opportunity as a shareholder of Teton to certainly benefit from capital raising capabilities that develop through digital distribution of our proprietary thoughts and processes. Thank you for your question. I hope that answers it. If there's any more questions? Yeah, so actually we have another question. It looks like another shareholder of Teton. This is to Steve Bondi. Steve, can you give a little bit of the, remind us a little of what you said before on Teton's capitalization? So that the question is coming into Steve, but what I would say is that, again, Teton is although it's pink sheet traded, please, I encourage you to go on the Teton website, tetonadv.com, and look at our public disclosures and our filings, which outline the fundamentals and economics of Teton Advisors, Inc. Steve Bondi, the CEO, please just to answer the question.
Sure. As I mentioned earlier, we have about 1,000,006 shares outstanding. We closed yesterday at $19 a share. That's approximately $31 million market cap. We have approximately $22 million of liquid cash and investments. And that's about $9.5 million of enterprise value. And we've had $3.5 million of EBITDA in our last full fiscal year, which was $2.9 million of EBITDA in our last fiscal year, which was 2022.
Thank you. I trust that satisfies. And one important point of that overall framework is the EBITDA on an asset manager, especially one such as Teton, where a large component of its business is in fact sub-advised to both Gabelli and Westwood. Is a significant component of that EBITDA, which translates to direct free cash flow to shareholders. And that free cash flow ultimately translates to a balance sheet build, which we encourage shareholders to think about in that context. So thank you. It looks like there's only one last question that's come in, and it's to Anand. And Anand, can you talk about the external providers that you use as part of your research, and what are they, and do you have any views as to kind of the general profile of them?
We use services. So for ESG ratings are concerned, we use services of Sustainalytics. We use MSCI using our FactSet module. We use Refinitiv. At some point of time, we also use S&P. We have ISS. So we have plenty of them. Plus our internal research is always there. Thank you.
Thank you, Anand. That's great. Well, with that, it looks like there's no more questions. I thank everyone for joining today. We encourage all of you to please contact us with any further questions or thoughts, again, about the developing and very exciting area in the investment management arena. So thanks so much and have a very good week, everyone.